Good morning, guys. We're going to get started here in just a few minutes. We'll have more people coming in, and we'll be admitting them as they join. So, and we've had somewhere around 150 or so register for today's Zoom. Of course, Blake Brown is going to be our speaker. And you see that he is sharing his screen now. If anyone has any questions or concerns, you've got a window at the bottom of your screen that says, or an icon at the bottom of your screen that says chat. You could type those questions in the chat box, or you will be able to verbally ask those questions later on. Either way will work there, but just remember that you can click on the chat box there and submit any questions or thoughts that you may have this morning. Be good to do that. I'll point out too on the bottom, I don't know if we'll ask for this or not, but there's a button to the right side of your lower below Blake's presentation there that says reactions. If you click on that button that says reactions, you can perhaps give a thumbs up or maybe clap your hands or do things like that. That's something that you're welcome to do if you want to react to something that is said here today. And so at any rate, we're glad to be able to offer this opportunity, and we'll be starting here in right at 8 o'clock is our plan.
Bryant, maybe as we're waiting for these last few minutes to get here till 8 o'clock, how about give what are some comments on what the tobacco crop in Johnston County was like in 2021?
That's good, and Norman, you can do the same thing for Wilson County here in a moment. The crop in Johnston County this year, you know, was sort of mixed in a way. Overall, we had a pretty good crop. Not by any means a record-breaking crop, but a good solid crop. Yields ranged from being a little on the low side where people had just too much water. We had some drowned tobacco, but Johnston County didn't experience quite as much rain as was received to the south and east of us. And then we got very, very dry at the end of the season. If you all remember, we started out the season kind of cold. We had some late frost even after transplanting had begun. Fortunately, we really didn't lose many plant stands here in Johnston County, and we were able to soldier on. But I think that resulted in some of our crop being a little later set out than typical. And we're pretty dry early in the season. We had a really good early season, and then we just had too much rain in late June and July, and that probably limited our yield potential to some degree. Quality was good, curing was good, and I think most growers were satisfied with sales and so forth. And the sales season really went better than it has in recent years, and people were able to keep up as they were barning tobacco and taking tobacco out. They were pretty much able to move it along at that time. You want to give an update on Wilson County, Norman? we've got a lot of people coming in to the room right now, and so we're admitting those one at a time. I will just add that, really, Dr. Matthew Vann, our tobacco specialist in the crop science department, organized this session today, and it's something that Norman and I had talked about. Typically we would have Tobacco Day in December. We've done that for a number of years here in Johnston County. And, things like that, you have to plan well in advance. And it's just been kind of complicated with the whole COVID situation. And so we didn't plan to do that this year, but instead we are offering several opportunities like this to present some information and data. This will be fairly brief this morning, but it'll give us all an opportunity to hear from Blake and be updated on the situation and outlook with U.S. flue-cured tobacco.
Right.
Yes.
I'm sorry. I'll jump in here. I was helping some folks get admitted. So I just want to give a real quick update on the Wilson crop. Wilson was right on the line where the excessive rains ended. So the majority of the county had too much rain in 2021. As you get north and west of Wilson, I think it got a lot better. We had a really dry spring, and everybody started praying for rain. And when a lot of farmers and people in the community go praying for rain, we get it. And then it started raining and continued to rain, and we had to deal with excess moisture and then turning dry again in late fall. But overall, I visited with several growers in the county doing a yield survey, and I've got the Wilson crop estimated at 1,928 pounds, which is, as everybody knows, that's way too low year in, year out for a yield. Price was better this year. We did see prices go up. The quality of tobacco was excellent as well. But overall, it was a tough tobacco crop in Wilson County.
Just another added comment, as the season wore on, COVID played a role on some farms and made some of our farms a little nervous about worker situation and so forth. But ultimately we were able to persevere through that. And, we had some outbreaks in labor camps, but fortunately that didn't really hinder harvest and so forth. And we were able to get the crop harvested, but it was a little nerve-wracking for some people during that time of the year. Okay, it is 8 o'clock now, or maybe just a minute past, and it's my role to get us started this morning. My name is Bryant Spivey. I'm County Extension Director here in Johnston County. We've got people joining this morning from Johnston County, from Wilson County, and many surrounding counties, and probably folks really throughout the tobacco producing region of North Carolina. And I've even noticed that we've got some folks joining us from other states, tobacco specialists like J. Michael Moore and David Reed. David Reed is in Virginia. J. Michael is in, I started to say South Carolina, J. Michael, but he's in Georgia, down there with the Bulldogs. And we appreciate those guys being with us today. There are other county extension agents on this Zoom today, and different people that you will recognize from different sectors of the tobacco industry throughout North Carolina. We're certainly glad to have you all join us. Glad to be able to share this update and information about tobacco production here in North Carolina and what our outlook and situation may be for the coming year. And certainly we all hope and dream about the great crop and the great marketing season that comes together at just the right time. And here today to talk with us, we've got Dr. Blake Brown. He needs no introduction really, but nevertheless, I feel compelled to say a few things about Dr. Brown today. He is, as I said, no stranger to any of us. He grew up near Boone, North Carolina. He grew up on a Burley tobacco farm there. He still lives there today. I know he's in Boone today. And even more so than being an economist and an extension specialist, I consider Blake Brown to be a farmer. He's active in the cattle business. And, I'm not real sure exactly how long Dr. Brown has served in his current role. I know how long I've served in my role, and I know he was in that role when I started. So I know he's been our extension specialist in this role for at least 28 years. And those have been really good 28 years. And how in the world he still looks like he's 25 years old, I don't know. I mean, he still has all his hair, and he's slim and trim, and his hair is dark colored. So I don't know how he keeps looking like that all these years, but he is a treasure to us here in North Carolina. I'll point out at one time he was a farm management agent. That was in the early part of his career. He even served part of that time in Johnston County. During his career, he's provided some key advice on the economics around tobacco around the time of the tobacco buyout. He even served during President Donald Trump's term as an economic advisor in Washington for a time. His knowledge about economics surrounding agriculture and tobacco transcends North Carolina. He is certainly an expert on tobacco throughout our country and really the world. And we have benefited from his expertise for many, many years. He's provided leadership to efforts at North Carolina State University, like the Agricultural Leadership Development Program and also the Executive Farm Management Program. I suspect he may mention something about the Executive Farm Management Program at NC State today. And that's something that he envisioned and got started in North Carolina. And it's a great program, certainly that our farmers can participate in. So with that, we're very fortunate to have Dr. Brown here with us to give us the economic situation and outlook for U.S. flue-cured tobacco. So with that, I will turn the floor over to you, Blake.
Thank you, Bryant. I appreciate that very kind introduction. And it's been a pleasure. I've been here 32 years, and my passion is working with county agents like Bryant and Norman and farmers. That's what I really, really enjoy. And I'm going to wind it up about next June. I think I'm going to retire, so I'm kind of looking forward to that. But it's been a good ride, and I do appreciate getting to work with such good people, and that's what's made it good, is actually the people that I've been able to work with. I see a lot of folks out there that I know and have worked with over the years, so it's good to see y'all this morning. It's nice that we have Zoom, that we can keep doing it this way. It works good in some cases, but I have to admit, I kind of miss that fried chicken and barbecue circuit that we used to do 20 years ago when we went around to all the counties and went with the tobacco team and did all those meetings. I have to say that was a good experience. But let's talk a little bit about the U.S. flue-cured tobacco situation and outlook today. It's not a bad outlook. We have one big concern, which is not just tobacco. It's a big concern for all of agriculture. And that is basically, our rising input cost. Let's see if I can get this thing to work in here. There we go. But let's look at our production for this year. We were at an all-time low last year, 238 million pounds of flue-cured tobacco produced in 2020. You go back 100 years, that was the lowest level. And, the main reason for that was because of the trade war with China. And China exited our market about midway through 2018 and did not buy any tobacco in 2019 or 2020. And so that just throttled our production, and contracted pounds went way down. Now, you see the caption up there, China is back. They did buy part of this crop. That's the reason that we came back to 303 million pounds. Who would have thought 20 years ago, when we had 1 billion pounds of tobacco production, that we would be excited to come back to 303 million pounds? But it is good to see some recovery there. And as I'll mention in a minute, we could see a little bit of an increase for 2022 as well in contracted pounds. So this is a graph that I always show when I do a tobacco outlook presentation, because it's just so important to understand what our competitors, which are mainly Zimbabwe and Brazil in the world, are doing right now. If you look at the Brazil crop that's projected to come off this January, which is their 2022 crop, you'll see that it is down some. And this is a projection from Universal Leaf Corporation. This is their November projection for what Brazil will be doing. And so right now, it looks like a little bit smaller Brazil crop, which is always good for us. If the Southern Hemisphere has a smaller crop ahead of us, then that means that we could get just a little bit of a bump in our crop here in the Northern Hemisphere. Zimbabwe's crop is about the same. They're bumping along around about the same rate. You can see that both of those, Brazil especially, is much bigger production than what we have here in the US. And probably Zimbabwe is about their limit where they can produce, so they're probably at about capacity. Brazil can produce more, but it does seem like that about 1.3, 1.4 million pounds is about a comfortable spot for them. Supplies are lower, believe it or not. It looks like that COVID may have benefited tobacco a little bit because maybe people stayed home more and smoked more. So we don't have surplus supply going into the 2022 crop. We have maybe a slight deficit in supply, not a lot, but maybe just slight. And so with that in mind, a smaller Brazil crop, it is possible we could have a little bump in our US crop. Now, you know, having a more contracted pounds for a lot of growers is really not the big concern going into 2022. And this is not just tobacco. We're seeing the cost of inputs just go out the roof for all of our commodities. And so the big concern going into 2022 is not so much contracted pounds as it often is, because that could actually go up a little bit. It's not quite so much price as we would normally think of, except now we realize that we need a higher price to cover some of these increased cost of production. Our main concern in agriculture, not just tobacco, is just the rising cost of inputs. And I think nitrogen costs are one of the big ones that we see. If you look at the price of anhydrous ammonia, for example, or natural gas, which is where we get a lot of our ammonium products, you'll see that they have just really shot up at the end of 2021. Now, 2020 was a pretty good year for us, wasn't it? I mean, we have had good commodity markets. We've had good prices for a change. And fortunately for us, in 2021, those input prices had not escalated when most of us locked those in and bought those inputs. But going into 2022, we're just seeing a lot of increases in all kinds of input costs. Chemicals, glyphosate is one of the big ones. You know, Roundup is just have seen, I think, like a 300% increase in some of our Roundup prices, generic Roundup. And, you know, nitrogen is another one. And this is urea ammonium nitrate, which is another nitrogen product. And you can just see what it's been doing this year, just going out the roof. And then here, it's not just nitrate products. We got diammonium phosphate here and anhydrous ammonia, which we just talked about. But you also see phosphate prices are going up. And we import most of our potash, excuse me. So we're seeing that in all categories, and probably if you looked across where our biggest concern on inputs are, it really is in fertilizer prices. And so the other one, of course, is labor. As we roll into 2022, I just learned this week, it looks like the adverse effect wage rate is going to be $14.16. That's a $1 per hour increase from the adverse effect wage rate that we had in 2021, $13.15 this past year. H2A continues to be very, very important for us in North Carolina. That's the way we get our sweet potatoes and our tobacco and a lot of our fresh produce harvested. It's also important for some of our livestock in businesses. Now, you know, we had some hope a few years ago that we might see this program a little easier to use, some changes that would make it a little easier and a little less expensive, but that's not going to happen. The program parameters are going to remain the same. We're going to continue to see the adverse effect wage rate escalate, and you know, it's going to be about the same. But now, you know, it's good, reliable labor for our farmers, isn't it? Now, many of you have used the same H2A crews for 20 years. You know, you've got a relationship with them. The problem is it's very expensive to use. And so the question really, though, rolling forward is what is going to happen, you know, in terms of immigration policy? Well, officially, probably not much. immigration reform is very, very difficult to pass. It's difficult to get people on the same side of the aisle to agree on it. I remember when we were working on it in the previous administration, it was difficult to get people within the administration to agree on what should be done in terms of immigration reform. It's just all over the board within both parties, you know, what should be done. So it's just a very, very difficult issue. But what we do see happening is we see changes within the administration in terms of how they enforce the current immigration laws. And this is nothing new. I remember many years ago, Bryant mentioned that I worked in Johnston County. I did, and I was there in 1986 whenever the Immigration Reform Act passed. That was the last time we really had any significant reform in immigration laws. And I remember farmers were very concerned that they would be able to meet the requirements of providing the IDs and all the requirements for the new immigration law. Farmers were thinking about they'd have to go back to machine harvest. There was a lot of movement towards machine harvest at that time. But then the law passed, and lo and behold, a few years later, everybody realized it wasn't that big of a deal because it really wasn't enforced. And if you look at this graph, this is border crossings from Mexico. And you see the light blue area is the estimated successful unlawful entries. And then the bottom, the dark blue portion, is the Border Patrol apprehensions. And so you can see if you go back 20 years, I mean, there was a pretty good chance that if you got across the border, you were going to be successful in getting a job. And then we saw that begin to change actually in the Obama administration. They began to clamp down on immigration some. You don't ever hear much about that. And then, of course, you know, the very high profile Trump administration, where they clamped down a lot more and started actually controlling the border and enforcing the laws that we had. So the question going forward is what will the present and future administrations do with regard to enforcement of the current immigration laws? We've seen a lot of chaos and confusion around this, you know, messages kind of implicit that it's okay to come to the U.S. But then, of course, we see when they gotten here, they've been turned around by Border Patrol. So I don't know exactly what to anticipate in the future. I would say this, if we do see laxer enforcement of the current immigration laws, both border apprehensions and enforcement, if you have someone that gets into the U.S., then that's going to change the labor situation. We're going to see California, for example, probably go back as much as possible towards undocumented workers. I don't know what that means for us here in the Southeast, though. It introduces some uncertainty for us. And one farmer pointed out when we were discussing this a while back, he said, if you're on the Department of Labor's radar, you're probably not going to be able to go back to undocumented workers, even if they're available. And he's probably right. That's probably true. So I see a lot of uncertainty with regard to immigration reform. I don't see much certainty that we'll have some passed. It's going to be more of a question of what we have and how it's enforced. So I wish we had better news on the labor front, but we don't. Hopefully, you know, at least the H-2A program will remain effective in its current state, and we can continue to use that even as expensive as it is. So having said all that, you know, what does that mean for production costs in tobacco rolling into 2022? Well, I took Derek Washburn's budgets, which he just came out with. Derek is in our department at the university, and he does the enterprise budgets for a lot of our commodities each year. He just came out with the 2022 version of the tobacco budgets. I went in, though, and tweaked it some, sort of trying to think about what could happen in the future. The big increase was the fertilizer cost, frankly, but the other big increase, especially if you were doing hand harvesting, as a lot of our operations, especially if they have sweet potatoes, do, there's a huge increase there because of the labor. But pretty much every other category increases some in 2022. We just really don't know how much. I don't know whether my guesstimate is correct or not, but I think it's pretty easy in a conservative scenario to come up with about a 14% increase in production costs for next year. So where does that put us if that's what happens? And again, I hope I'm wrong. I hope it's smaller than that, but I'm afraid it could actually be even larger. It's just really hard to tell right now. But if it did increase 14%, where would that put us? Well, for hand harvest, you have to receive a pretty good premium or have pretty above average yields to keep you in the black just on return over variable cost. I mean, it could easily put an operation in a position where it would be difficult to recover their variable costs. Now, if you have good yields, you know, if the hand harvest really does get you a premium for your tobacco, then probably going to be able to recover it, but you're probably not going to be able to recover all the cost of your fixed cost, you know, equipment and particularly curing barns and those kinds of things, your H2A overhead, that's a fixed cost. And so what that says is that, and this is not a new trend, but it accelerates a trend that's already happening. We're seeing a lot of farmers that can't recover their fixed costs. They may recover their variable costs, but what that means is as you wear out your equipment, you're probably going to exit production. And I think this just accelerates that trend. Now, for machine harvested in the East, where our production costs are pretty low and where maybe our yields are above average, you're probably going to be able to recover your variable costs this coming year. But the thing is that, you know, when you look at tobacco versus another commodity, which is much easier and much less management intensive, are you going to keep doing that tobacco in the long run? You know, as the younger generation takes over, are you going to be, are they going to be willing to continue tobacco production at the margins you see? Because it's a very, excuse me, management intensive crop and a very labor intensive crop, even when you're doing machine harvesting. So I think this probably pushes us more along the lines of more attrition in the tobacco sector, more concentration that we've already seen in that I-95 corridor. We'll just have to see. I mean, the production cost issue, like I said, this is not just an issue for tobacco. This is an issue for all of the farming sector as we roll forward into 2022. All right, well, let's talk about some other things as well. Let's talk about trade a little bit. Exchange rates are favorable. We did see during 2020, we saw the dollar weaken. This is US dollars per euro, which is a pretty good gauge of exchange rates. So we've seen that in Europe and elsewhere in the world, they can buy more US product for their currency, whatever that is. And so that's a good thing for agricultural trade. Exchange rates are a huge factor, even though we don't talk about them that much. They're still a really, really big factor in trade. What about China? Because, you know, for years we've talked about China, we talked about it in tobacco, we've talked about it in every sector of the economy. The difficult thing with China is they are back. They are buying more US products for a lot of reasons, including the Phase 1 agreement that was negotiated by the previous administration. But going forward, US-China relations are going to remain strained. We've seen the rhetoric from the previous administration. We've seen sharp rhetoric and policy from the current administration. I don't think that's going to change. This is across the aisle. It doesn't matter whether you're Democrat or Republican. Most everybody sees China as a economic threat in some ways, and also a military threat now with growing escalation of their military force. So again, I don't think that's going to change. Now, are we going to quit trading with China? Certainly not. I mean, China needs the US market and the US market needs China. But I think what it does is it probably is going to temper temper our appetite for Chinese goods. And it's also going to introduce a little bit of instability here because of the political strain. And in particular for tobacco, you know, they're a very important customer, as we talked about, and how that, as you can see, throttled our exports of US flue-cured tobacco back in 2019 and 2020. We're seeing that come back. We'll see that come back even more in 2022. The issue that we have in tobacco, though, is that most of our tobacco goes to China Tobacco, which is a state-run monopoly. And state-run monopolies are more susceptible, more responsive to any kind of trade war than other private sector companies in China. So it means that we're a little more susceptible to whatever the politics between China and the US are. So that's just going to be a reality we deal with. And I think what it means for our leaf merchants and for all kinds of companies that export ag products is they need to be looking at a very balanced portfolio and understand the risk in being in that China market. The China market is still a market of potential growth. You know, even though their cigarette consumption is declining, you know, if they continue to sell more premium cigarettes relative to economy banned cigarettes, then, you know, there is an opportunity for them to use a little bit more U.S. tobacco than that. That same opportunity exists in other countries like Malaysia, Indonesia, other Asian countries. So there is a little bit of growth opportunity in terms of exports of U.S. tobacco to Asia in general. So we just have to remember the risks that are associated with China and look heavily at some of these other markets as we go forward. Okay, tobacco taxes. Nothing new here either. You know, we've seen lots of efforts over the years to increase the excise tax on tobacco products. The last time we had an increase in the federal excise tax was about 2009. That was when we saw a $1 increase per pack. We haven't seen an increase in the federal excise tax since then, but we've seen lots of increases at the state and municipal levels. There is an act that was introduced in April to increase the federal excise tax on all tobacco products, including vaping products. It was introduced by Senator Richard Durbin. It made it into the Finance Committee. It has not come out of committee yet. The Build Back Better Act, which is the huge $2 trillion stimulus act that has passed the House, it originally had some of the elements of this tobacco tax increase in it. It's my understanding that as of November, they had been taken out, so they're not in the current version that was passed by the House. I think it's a very lucrative target, though, for them, because this is one that would raise quite a bit of revenue. And so I do not know if this, what the chances are of this Build Back Better Act passing in the Senate is. But if it does pass, if there's a reconciliation between the Senate and the House, then we'll see this brought up again. Whether it will come back into the act, I don't know. It's an easy target, but of course, when you have these margins that are so thin on these votes, then sometimes if there's one Democratic senator or congressman that didn't like it, then it could be that it doesn't come back in just to get their vote. So we'll have to see what happens here, but it's always a threat. And it's an easy target, as I say, but at least for right now, it's not in the Build Back Better Act. And so we'll just have to see what happens as it goes forward. And there was a lot, this was not uncontroversial. There were a lot of people that really had no vested interest in tobacco that said this is a mistake because it's a fairly regressive tax on lower income people. And in fact, it could even discourage people from switching from combustibles to vaping products, which from the health advocate standpoint may not be a great thing. So again, something to watch, but at least right now it's not in legislation. So we'll just have to see. So what are some of our takeaways? Our biggest concern for agriculture in general, and tobacco is no exception to that, is just the sharp increase we see in production costs for 2022. You know, hopefully this will push prices up a little bit, but we'll have to see. But it's certainly going to squeeze our profit margins, especially those nice profit margins we had for a change from 2021. Could see an increase in contracted pounds. I think that's quite possible. I don't think it'll be large, but it's possible we could see an increase. The thing that we have to keep remembering going forward in terms of the export market, we need to focus on other countries besides just China, because yes, China's back, and that's great for North Carolina, but that relationship between the U.S. and China is very fragile, and particularly a state-run monopoly like China Tobacco is very susceptible to political changes, especially if they can get the tobacco from somewhere else like Brazil. An increase in tobacco product excise taxes, right now it looks like it might not happen, but it certainly could. I don't know exactly what to say about that, but something we'll have to keep our eye on as we roll forward. But, you know, in terms of domestic use of U.S. tobacco, there's just all kinds of factors that will continue to put downward pressure on that. You know, any hope of growth we have is in those export markets. So we still have to stay focused on that. So hopefully production costs won't increase as much as they look like they will this year. That would make for another pretty decent year for tobacco next year, but we'll just have to see. So with that, I will stop. And if there's any questions, I'll be glad to try to answer those. If you want to enter those in the chat box, we can try to answer any questions you have. But thank you all very much.
Thank you, Blake, for those comments. I'm Norman Harrell. I'm the county director in Wilson County, and I'll moderate the questions. Be great if you have questions to enter them in the chat, and then we'll eventually we'll do a call out to see if anybody has one. But we just had a question come in from Mitch Smith. Blake, what % of the U.S. crop does China buy?
I'll have to say I don't have the percentage off the top of my head, but you're talking around 60 million pounds out of say 300 million. So that would be about 20%, wouldn't it? So it's very significant. And you can see that, you know, in our recovery from around 238 million pounds to over 300 million pounds from 2020 to 2021. So yeah, around 20%, I think is right.
Blake, you mentioned you updated the tobacco budget or the numbers from Derek Washburn. Is the updated budget going to be in tobacco information, or which, do you know which version of the tobacco budget?
Well, it will be the version that Derek has updated. And of course, you know, when they do the updates on commodity budgets, they don't try to forecast too far ahead in terms of what prices might be because there's so much uncertainty. So it will be Derek's updates and probably not mine. And there are some increases in Derek's updates. You know, fertilizers, certain enough when he looks at prices this fall, he can include those. But I made some guesstimates about what other prices might go up as well. So that won't be in there.
Well, that is certainly the main thing on everyone's mind right now is they're running their budgets and trying to figure out what those input costs will be. But interesting that your numbers are showing a 14% increase over what will be published in the tobacco information book.
Well, it's not over that. There will be an increase. I don't remember what that is, but it's around 5 or 6%, and it's mainly because of fertilizer prices. They could now that when he did that, he did not have the adverse effect wage rate, so he could actually update that one too now that we know it. But I'll be meeting with some of our tobacco growers next week actually to take another look at what production costs might go up. So maybe my guesstimates will turn into estimates, you know, after that. Maybe we can do a little better job, but it's a really big deal for us going forward.
Did have a couple questions in the chat. One, Tim Hambrick wanted to know, when you looked at the budget, did you make adjustment for higher fuel costs such as $2 propane?
Yes, and Derek actually made adjustment for that as well. So I think he had in there about a 30% increase in curing fuel cost.
Okay. And Bryant just put into the chat, if anybody wants the link, that'll be the link to the tobacco budget that's listed on the NC State website. So you can click on that and it'll take you to that link. Reggie had a question. What would you suggest as the best avenue to get relief with the H-2A program? Are you hearing of any changes being discussed within reconciliation?
I wished I had a good answer, Reggie. I'm sorry, I don't. I don't really see any relief in the future. And so I just would be very, very surprised if there were any changes that made the H-2A program easier or less expensive to use with the current administration and the current members in the House. It just would be very hard. As I said, I mean, we worked, when I was up there a couple of years ago, we worked a lot on some changes that would have made it less expensive and easier to use. But even within the administration, it was hard to get agreement. It's just a very difficult area. So I hate to say it, but I'm just not optimistic that we'll see any changes to it. I wished I had better news on that front, but I think that's the reality that we are with. So probably the best change you can look at is if there's a better way to mechanize, unfortunately.
Right. Also, if you use that link that Bryant shared, Derek has created a crop comparison tool to evaluate the different crops, where you can kind of see all the budgets in one spreadsheet. It's a very nice tool if you haven't used that.
It's a really useful tool. I would echo that. Tobacco's not on there. Maybe we could get him to put tobacco on there, but yeah, that's a great tool to help you compare from one crop to the other.
Okay. Brent Leggett asked a question on what Wilson County's 3-year yield average is, and we're averaging right about 2,000 pounds. We have had some challenging years recently here where we have not been able to have higher tobacco yields. But in the tobacco budget, Blake, do you know what the average yield is in that budget?
They do not publish the yields or the price in those budgets. So
it's just showing what input costs are.
Yeah, it's just basically input costs. So you can stick your prices and buy stock position in that budget and see what you come up with. But you know, I mean, we're hearing a little talk that prices could increase some, but the problem is it's going to take more than a nickel a pound increase to cover these increased costs, you know, especially at our current yields. So you're going to have an above average price or an above average yield to basically be close to as well off in 2022. So
Norman, I thought I'd just interject. I think our yield averages in Johnston County the past 3 years are probably on par with what you said. We've had some tough production years. We were a little better this year, but I would say growers, they really need to focus on what their yield is and what their yield potential, because if you look in counties, even within counties, there is a tremendous variation in yield potential or yield history from one farm to another. And there are some key factors that play a role in that. And so, you know, growers have to focus on what they can do and not too terribly much on county averages, because, you know, you're going to just see a lot of variation there.
Thanks for those comments, Bryant. We don't have any more questions in the chat. Is there anybody that would like to unmute and ask a question? Anybody, any more questions? I'm going to make some comments and see if there's any more questions that come in while I'm kind of wrapping things up. This was the first webinar in the Tobacco December webinar series. I hope you enjoyed it today. This was always something everyone looked forward to at Tobacco Day. But this is always, everyone's always real interested to hear Blake's comments on the tobacco situation. There are 2 more webinars in this series. Next Friday at 8 o'clock is going to be Matthew Vann is going to be addressing fertilizer cost. It's going to be hosted by Tim Hamrick. And the following Friday is December 17th. And Dr. Matthew Vann and Maggie Short are going to give a presentation on cigar wrapper production. So be sure and look for those registrations, and you will have to sign up separately to attend those webinars, but it should follow a very similar format for what we did today. Just to make some comments also about the upcoming tobacco production meetings, counties are planning to have in their a return to normal production meetings. So we will be in-person meeting. Those will typically take place in January. The Johnston County tobacco meeting will be January 14th at 10 a.m. That's a Friday. The Wilson tobacco meeting will be on Tuesday, January the 18th, also at 10 a.m. Note that the GAP training will be separate this year. Last year, you had to do that training online, but the GAP training this year will be in person, and they will have some meetings scattered around the state, and then they'll also tie in with a few company meetings to get you the training that you need. But it will be separate from the normal cooperative extension tobacco production meetings. Matthew Vann wanted me to mention that the tobacco short course is planning to happen again this year. It's going to be January 31st through February the 4th. So if you know of a young producer that's not been through that program, it is a great introduction into tobacco production. And they get to hear from the different tobacco specialists and go through a grading school. It's really a great program, and I'm sure a lot of you have been through that, but any young producers that have not been through it, the applications will be available through the county agents. So reach out to your county agent to get a copy of that. This program was recorded today, and I'm sure we'll be able to send a link out later in case someone wants to review some comments, or in case someone missed our presentation today, that will be available. So that's my closing comments. Final call for questions. Also either call out or in the chat.
Norman, I'll just make one addition here for a plug for our executive farm management program that you'll see is my background. We're getting ready to do our fourth full program. It'll be in January and February of next year. It's 9.5 days of instruction. Core topics are strategic planning, financial management, and human resource management. It's a great program. It focuses on commercial farms in the Southeast, and we still have a few slots open. It's filling up quickly, but I suspect in another week or two it'll be full. We accept up to 40 producers, and we've got producers now that are signed up from over half of our class is going to be from North Carolina, which it usually is, mainly Eastern North Carolina. And but we do have producers from South Carolina and Georgia signed up as well. So you learn a lot from the network. So if you have an interest, just Google Executive Farm Management Program or go to our website, go.ncsu.edu/EFM, and you can sign up there, or give me a call or shoot me an email. I'll be glad to talk to you about it. So looking forward to having another good group of farmers. We have over 100 alumni now from this program around the Southeast. So
thank you, Blake. That is a great program. I know many of you had the opportunity to go through that. Bryant and I have had the opportunity to participate in it. And with what Blake shared about how tight production budgets are going to be, not only for tobacco, but for all crops, this would be a great course to take to think about your whole farm planning on your farm. So reach out to Blake, reach out to any extension agent, and they can get you information on that as well. With that, thank you everyone for joining this morning. Thank you, Blake, for giving us the comments. And join us, make sure and join us next Friday for the next tobacco webinar. Hope everybody goes out and enjoys this beautiful day.